Well, as we've been mentioning, Japan shares tumbled with the Nikkei and the Topix suffering their third worst daily declines in history. All those concerns are growing about the safety of the nuclear plants. And we're joined now over the phone from Chicago by Harris Associates Chief Investment Officer of International Equities, David Herro. Herro manages over $10 billion, and 4 out of his top 5 holdings are Japanese companies. David, thank you very much for joining us.
Yes, good morning.
And David, let me just go through your holdings and what they've done since March 11th, since that earthquake. And it's Daiwa, Toyota, Canon, ROM. Let's pull them up. Down 14% for Daiwa, Toyota down 7%, Canon off by 5%, and ROM off by 9%. So not good, obviously, for your portfolio. Does this change the game for you with Japan?
No, it's not good at all in the short term. Certainly fear, in my view, has replaced the fundamentals. And our game plan focuses on one thing, looking for solid, medium, and long-term value. And we define that as quality companies at low prices. That's our game plan. Does this disaster change our game plan? It does not, as the disaster really is more of a short-term phenomena. Say over the next year or so, there's going to be rather large adjustment that has to take place in Japan. However, the intrinsic value of a business is determined by those longer-term factors. So a lot of these companies are down 10 to 20%.
Right.
And again, though it's reflective of the fear that's in the market and to some degree the uncertainty, it is not reflective of the long-term viability of these businesses.
But David, here you've got the Prime Minister saying this is the worst crisis in Japan since World War II. How can you say for sure that this really is a short-term issue for Japan?
Well, I can't say for sure, of course, because there's no absolutes in this business. But ultimately, these companies are not Japan. Toyota produces and sells all over the world. Canon produces and sells all over the world. Rome produces and sells all over the world. All 3 of these companies have strong balance sheets. They have net cash. I mean, business, they're global companies. If they were just a company that sold into the area, 100 miles surrounding the quake zone, yes, absolutely, there'd be permanent damage done to their value and to their business valuation. But,
David, it's Sheila Dharmarajan here. Are you using this drop-off right now in the stocks to add to your position?
We have been adding to our Japanese names since the drop-off, yes.
Which ones?
I can't really get into the specifics, but you see what our larger positions are. In our view, the intrinsic value of these companies has not materially changed, and as such, as the prices drop to us, that represents more opportunity to buy quality at a low price.
Hey, David, it's Dominic here. One of the things that we talk about oftentimes in disasters or this black swan, the idea that statistically possible events happen, is the idea of hedging. Are you one of those money managers out there that's looking to protect the client portfolio or just look to buy on the downturn?
It's a good question how you describe these things. I mean, our belief is that when you buy quality businesses at really low prices, that protects the downside. And when you look at balance sheets, for instance, and when you look at business mix, these are forms of risk aversion. Companies that have strong balance sheets, companies that have a sales base that's widely dispersed throughout the world. Those are the types of things how we define and measure risk by. Balance sheet, fixed assets, sales breakdown, that's what represents risk. And so in order to avoid risk, you look for companies that aren't leveraged in terms of financials, in terms of operational gearing, or in terms of sales.
How do you hedge, David, though? I mean, is there any way actually to hedge this if you wanted to?
Not really. I mean, if you were a long short fund, I guess you would go long some things and short others. The only thing we technically hedge is the currency exposure, because oddly enough, the Japanese yen has strengthened through this.
Right.
Now, the only argument fundamental that you could make is that if Japan Inc., if the sovereign Japan is going to go through some turmoil over the next year, their yen should not be strengthening. It should probably be weakening.
It has been a peculiar move that we've been talking about. David, thank you. Appreciate it. David Herro of Oakmar Funds.